Let's dive into what happens when the market sweeps the liquidity zones and how you can use that to your advantage. Picture this: when the price hits a sell-side liquidity pool, it usually spikes upward. On the flip side, when it taps into a buy-side liquidity, it tends to drop. Liquidity is a big deal for the heavy hitters in the market. Think big banks, hedge funds, and other major players. They know retail traders like us often park our stop losses or pending orders at these key levels. By pushing prices into those zones, they can trigger our stops, scoop up our cash, and move the market in their favor. But here's the good news: with a tool like the liquidity sweep filter by Algo Alpha, you can pinpoint these liquidity zones and ride the wave alongside the smart money instead of getting burned. I'm going to break down how this awesome indicator works and how you can use it to level up your trading game. If you find this helpful, don't forget to smash that like button. Let's get it started. To use this indicator, head over to TradingView, the platform I'm using for this demo. If you don't have an account yet, I'll drop a link in the description below so you can sign up. For this example, I'm pulling up Tesla's stock, or TSLA, on the NASDAQ using the 15-minute chart. Once you're on TradingView, click the Indicators tab, search for Liquidity Sweep Filter by Algo Alpha, and add it to your chart. Boom! There it is, the liquidity sweep filter, a game changer for spotting those moments when the market triggers a flood of orders. So, what's a liquidity sweep? It's when a ton of orders like buy stops, sell stops, or stop losses get hit all at once, causing a sharp price move. This indicator helps you catch these moments, which often signal potential reversals or shifts in the market's structure, especially in wild, volatile conditions. It works by tracking swing highs and swing lows, those key price points where retail traders tend to place their stops or orders. When the market hits these levels, it sets off a chain reaction of buying or selling pressure, creating what we call a liquidity sweep. Let's clear up the lingo. Sell-side liquidity usually hangs out at swing lows, where traders place sell stop orders or stop losses for their long trades. When the price dips to that swing low, it triggers a wave of buying pressure, pushing prices up. Buy-side liquidity, on the other hand, is typically at swing highs, where traders set buy stop orders or stop losses for short positions. When the price hits that swing high, it sparks a surge of selling pressure, driving prices down. Now, let's talk about how this indicator looks on your chart. First up, you've got the trend filter, which shows whether the market's in a bullish or bearish mood. Green means bullish, of course, red means bearish. You also see trend shift triangles pop up when the market flips from one trend to another. A red triangle signals a shift from bearish to bullish, and the green one marks the opposite. The trend filter calculates these shifts by comparing the closing price to upper and lower bands. Next, you'll notice horizontal lines on the chart. These are your liquidity levels. In a bullish trend, they're green and represent sell-side liquidity. In a bearish trend, they're red and show buy-side liquidity. The brighter the line, the more stop orders are clustered at that level, meaning it's a hotter spot for liquidity. Darker lines? Fewer orders, less action. When the price hits one of these lines, you get a liquidity sweep, marked by arrows. A green upward arrow signals a bullish sweep, hinting at an upward move. A red downward arrow points to a bearish sweep, suggesting a drop might be coming. The indicator also filters V-sweeps based on the market's overall trend. In a bullish market, you'll only see green lines, or let's say sell-side liquidity, and bullish sweeps. In a bearish market, it's red lines, or let's say buy-side liquidity, and bearish sweeps. This keeps you aligned with the market's direction so you're not fighting the trend. You'll also spot two types of sweep labels. hollow triangles for minor sweeps, where orders get absorbed gradually, and solid triangles for major sweeps, which happen fast and pack a bigger punch. For trading, we're focusing on those solid triangles. They're the high-impact signals. Next to each sweep, you'll see a number showing the volume at that swing point. Higher volume means stronger market interest and momentum, so keep an eye out for that. Another cool feature is the volume profile overlay, which highlights where trading activity is most intense. Bright bars show high volume zones, while darker ones indicate quieter areas. You can draw a horizontal line at a bright bar to mark a key price level. Prices tend to react strongly here, either bouncing or breaking through with force. There's also a bounding box that shows which part of the chart the volume profile is analyzing, usually focusing on recent candles for the most relevant data. Want to dig deeper? Double-click the indicator. Go to the settings and adjust the bounding box to include more historical data, say from 40 to 200 candles. You can also tweak the scale to make the volume bars easier to see. While we're in the settings, let's break down the options. The length setting controls how many periods the indicator uses to calculate trends. A longer length gives you a smoother long-term trend ribbon. A shorter one makes it more sensitive to price changes. The multiplier adjusts the standard deviation for the bands. Higher values widen them, filtering out noise. The source setting lets you choose which price data, like close, high, or low, the indicator uses. The major sweep threshold determines what counts as a major sweep. Higher values mean only bigger moves qualify, and it's on a 0 to 100 scale. You can also toggle minor liquidations off if you're only interested in major sweeps, like I am for my strategy. I also hide the bounding box but keep the volume profile on. You can mess with colors and other visual options in your Style tab to clean up the chart. Now let's talk trading. To go long, first make sure the market's bullish. Check for a green trend filter with the price trading above it. Next, look for a major bullish liquidity sweep, marked by a solid green upward arrow. Check the volume on that candle. It should be at least 150,000 on the 15-minute chart. For other time frames, multiply the time frame in minutes by 10,000 to get your minimum. For example, 10 minutes equals 100,000, 1 hour equals 600,000. Then check the volume profile for at least one bright bar within the candle's high and low, showing a strong interest. If there's no bright bar, skip the trade. Mark the candle's range with horizontal lines at its high and low. Wait for a green candle to confirm the trend is still bullish, then enter the long position. Set your stop loss at the trend filter line and your take profit at 1.5 times your risk. Let it ride, and you're likely to see a win. Here's an example. The market was bullish with a green trend filter and price above it. A major bullish sweep hit, confirmed by a solid green arrow when the price touched the sell-side liquidity levels. Volume was 299,000, way above our 150,000 threshold. The volume profile showed a bright bar in the candle's range. After a green candle appeared, I entered the long position, set the stop loss at the trend ribbon, and take profit at 1.5 times the risk. It worked out great. For a short position, do the opposite. Confirm a bearish market with a red trend filter. Look for a major bearish sweep, or let's say solid red downward arrow, at a buy-side liquidity level. Volume should be at least 150,000, say 1.84 million, like in one case. Check the volume profile for a bright red bar in the candle's range. Enter the short on the close of a red candle. Set the stop loss at the trend ribbon and take profit at 1.5 times the risk. I've seen this setup play out profitably too. That's the rundown. This liquidity sweep filter is a straightforward yet powerful tool. Test it in your trading system, tweak it to make it your own, and see how it boosts your results. If you found this helpful, hit that like button or subscribe for more. Catch you in the next one.